Greetings, greetings, greetings. You are now tuned into the Vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live or listening to replay. Definitely wanted to do this episode 191, the retail apocalypse. Corporations live paycheck to paycheck too. And so really excited about this episode. We got our trading partner Cornell here today. He's definitely got a webinar coming up actually on the 17th, so we can actually talk about that as well. Cornell is doing the webinar, the trading webinar for institutional mindset. And it's so interesting, just to start out with a quick, it's so crazy how when you say most traders don't know how when the market's going to turn around, what you share with the candlestick patterns, even a 200, knowing when it gets too far away from a 200, it's just so many key elements that you keep it simple and a person can learn. And it's just really incredible. Appreciate Cornell for sharing that information. Even the higher knowledge information of the higher time frames is as we just joked about it, how you can let trades run for a week to a month to 3 months. That's a lot of power. That really takes it from trading to investing. When you have longer term plays where somebody would say, oh, this is an investment like a mutual fund or something like that for themselves, they've actually hand selected the stocks or the pairs or currencies or even market that they want to sit in and ride. And Cornell, we could even start out by saying, hey, the stock market's up at 9,300 on the Nasdaq today. So what happened there? 9,700 is the all-time high. It's at 9,300 in May, coming off of that strong rebound in what will be considered what is that? What month was that? Like April, February-ish, March-ish, April-ish.
Yeah, it's headed up that way. But it's gonna come down again because,
Okay.
like I said, the real situation ain't been addressed yet, which is gonna be these jobs, these bankruptcies. I'm starting to see, like, I'm looking at real estate. I'm starting to see the foreclosures pop back up. 'Cause, they were delayed, postponed. Everything is still moving slow, but market really just moving around. Okay, we opening this up. Okay, market go up. That ain't no real data. So I see it setting up because, like I said, it's gonna be a minute for everybody to go back to spending and everything else if they can go back to spending.
Right. And this is why we had to talk about this retail apocalypse. Corporations live paycheck to paycheck too, because there are so many right now that are actually looking to file bankruptcy in these times, and we want to address that candid bottom line issue is that there are corps, big companies, Fortune 500s that are filing for bankruptcy right now. We've heard about some of the newer ones, like Cornell talked about with the Neiman Marcus, and so we understand that this is a business play. So we want to kind of pair this not just, oh well, it's the retail apocalypse. What happens in your personal life? What happens in your life where you say, okay, the corporations are filing bankruptcy, but all they're doing is restructuring. And we're going to read that and hear some of that in the details today. Is that these are restructuring. So when we talk about the retail apocalypse, corporations living paycheck to paycheck, it's because there's a restructuring. There's a restructuring going on in the world right now. But most people don't, they're not aware of that. And so we want to talk about the retail apocalypse, corporations living paycheck to paycheck too. So we have Cornell here. We appreciate you coming through. Uh, we're going to go through some of the larger ones that have gone through bankruptcy. And maybe some of the names most people are familiar with. Forever 21 in 2019 filed for Chapter 11. Chapter 11 is closing hundreds of stores and doing that within 40 countries. They're already adapting to the habits of people being online. Would you agree?
Oh, definitely. They What you should have got out of this was you need to create your own business. Like I even been looking at some stuff from the house now. Like, okay, I had success in this stuff years ago because jobs going away, man. Like these people, like I said, they done figured out they can run their companies with 70% less workforce.
70%
And
less.
you know what, Chris? Hey, Chris, you know what? I just pay y'all a little bit extra. We'll just keep it moving how it's moving right now. Because, like you see, the market's still up. For certain companies, they making tons of money. And they just hiring people like that from the house right now. Or they didn't cut it down and they just got a minimum amount of people. But like I said, now they see like they know the rest of the year gonna be a hard year, so them jobs ain't coming back. Even even if they want to bring them back, they're not gonna bring them back this year.
And they
I
talk
don't
about
see
these
it. It's
manufacturing
gonna take a
jobs.
while.
They talk about these manufacturing jobs are supposed to come back to the states. We're going to talk about product companies. Here's a product company, Diesel Jeans. They filed for bankruptcy in 2019. Here's another company for you all, Payless. They filed for their second bankruptcy in 2019. The first was late 2017.
Yep. They showing them been closing them stores for the last 2 years.
Jamboree. That's a product category for children's apparel. So, oh no, children's apparel. I'm gonna give you the synopsis we got for their company. Jamboree filed for a second bankruptcy in 2019, announcing that it would close about 800 Jamboree and Crazy 8 stores in the U.S., Canada. Jamboree has closed and liquidated 300 stores and eliminated roughly $900 million in debt following its first bankruptcy in June 2017. But it continued to steadily lose market share after that point, and Jamboree is now selling its flagship brand as well as Crazy 8 brand to Children's Place for $76 million. $7 million. The children's apparel retailer will also sell its Janie and Jack clothing line to Gap for $35 million. So I can keep going. We got a mattress company. Most people don't know who Innovative Mattress is. We're gonna keep going. David's Bridal. Who everybody know who David's Bridal is. They filed for their bankruptcy in
Oh, they
2018.
want they found bankruptcy?
Yeah,
Oh
here
man.
we go. Struggling to keep up with online competitors, the burden with hundreds of millions of dollars in debt from a prior private equity buyout, David's Bridal filed for bankruptcy in November 19, 2018. The bridal apparel retailer secured financing to keep its website and more than 300 stores operating normally as it's reorganized. It's called a restructuring. Promised that brides would still receive their wedding dresses on schedule. Davis Bridal emerged from bankruptcy in 2019, yet still faces considerable challenges, and the marriage rate continues to decline, and millennials in particular delay in their trips to the altar. So that's really simple. But no, let's go ahead back to another one. Here, you already know who Sears is. How's Sears still around? We thought Sears wasn't around. I thought Sears went under, but they're not. They went under in certain parts of the country. So Sears, the retail giant, filed for Chapter 11
Yeah,
protection
did.
in 2018, following years of financial struggles, in part due to thriving online retail ecosystem. Despite reducing assets and selling real estate over the years, the company was unable to pay off its $134 million worth of debt. Sears Holdings, the parent company of Sears and Kmart, said it plans to keep profitable stores running, but by the end of 2018, the company was looking to shut down 188 stores out of nearly about 700 remain. In 2019, the New York court approved a $5.2 billion bid by Sears chairman Edward Lampert to buy the company. How does a chairman buy the company? This guy's been lurking in the shadows for years. He's been lurking in the shadows for years.
Buy the company, man.
Huh?
You know how they buy the company.
Right. So look,
It's like I was telling you how the phone companies did when I used to work back in the day. How the company that got less money than you buy you?
so
It's always a play.
right. So now that it shed its debt and pension obligations while closing unprofitable stores, the retailer faces many of the same challenges it once did.
Yeah,
Personal,
you see what you just said?
what's that?
Pension obligation.
Oh yeah.
They basically this what happened at the phone company. The Bell South had theirs overfunded. The sale happened. Guess what? oh, y'all got this extra money sitting here. We gonna take it and pay ourselves. So now they just switched over the regular pension on over to the new company, but they kept all the excess money. He probably buying the company with the excess money.
Right. Right.
Real slick stuff.
Yeah. So you know who Mattress Firm
Not breaking
is?
no law. Mattress firm. I'd heard of it.
Mattress Firm is a
They
pretty
kind of
big
like mattress.
mattress. Yeah, it's basically,
Yeah,
they're pretty big. We're gonna keep going past them. You know who Brookstone is?
I know who Brookstone is.
All right, Brookstone, Gadgets and Gifts. Brookstone, a mall chain retailer that sells a variety of products, filed for Chapter 11 bankruptcy in
You
2018.
know, you you
Huh?
naming out a lot of outlets
Oh yeah,
companies.
oh
So
yeah, oh yeah.
outlet real thin, like Brookstone, Jim Barry, all them was at outlets and stuff.
Rockport Shoes. In 2018, May of
What,
2018,
what,
filed Rockport Shoes. These are products. So
what?
we're not just naming uh you know
I didn't know about Rockport.
Rock.
Rockport used to make some nice walking shoes.
Right. Well, in Rockport, a Massachusetts-based company filed Chapter 11 bankruptcy May 2018, citing a decline in traffic in physical stores and rocky separation from uh, previous owner, Adidas unit Reebok. I guess they all of a sudden got into Reeboks and Adidas. Now, listen, the company has since announced it will enhance its focus more on the global wholesale, independent, and e-commerce businesses. Non-West Holdings. Everybody knows. Well, a lot of people know who Non-West is.
Somewhere
Remington
you know,
Outdoor. You know who Guns are. You want to know about the gun company? Remington. You know about Remington?
doing out of business.
Remington, American Firearms Manufacturer Holding Company. It is a Remington Outdoor filed for bankruptcy
Okay.
protection in March 2018. They the move surfaced amid increasing debts, dropping sales, and lawsuits stemming from a 2012 Sandy Hook school massacre in which the company's rifles were used. The company came out of bankruptcy in May after a judge declared the Delaware announced to a restructuring. See how we talked about the restructuring? That's from the whole conversation. A restructuring plan that cleared them of more than $775 million in debt as a part of the restructure would no longer be owned by a private equity firm, uh, Cerberus Capital Management. JP Morgan's asset management arm and other creditors will instead take control. So, yeah, they made it out of their hole. They filed very quickly. So, we're pointing out to you all how the retail apocalypse look. Companies file for bankruptcy and get out. It's the same thing for you in your life. People talk about bankruptcy. There's different ones. Now, most people aren't looking at 11. So we're not going to get into that conversation of the ones that they have out there, but we're going to talk about the fact that they're out there and people and the companies are using them, but people may not. It was quite a few. Toys R Us. Toys R Us was the third largest bankrupt in the U.S. after Kmart in 2002. Federal department stores, no, now Macy's, in 1999. A mounting debt due to leveraged buyout by a private equity firm in 2005, along with competition from Amazon and other online merchants. See, the online merchants are winning. Caused Toys R Us ongoing crisis, which culminated in a Chapter 11 filing in September 2017. Despite hopes of a turnaround, a Chapter 11 filing in March 2018, the company ultimately decided to close all of its stores after disappointing holiday sales period. This was in the past 2 years when everybody was riding high on the hog on the past stock market. You've been riding high on the hog for the past 10, 15, 20 years. And guess what? What did they say? True Religion. You ain't think True Religion was going to file for bankruptcy? This is an apparel company, high
Damn.
end clothing. Right, here we go. California based denim retailer True Religion was another company who sought bankruptcy in efforts to revive its huge debts, decreasing sales. The company struggling to retain business in a difficult denim market that was being chipped away by athleisure clothing, called yoga pants. Here we go. The yoga pants trend has taken over True Religion's trend. Here we go. As well as fashion market of low price retailers. So women are wearing these $35, $50, $60 pair of yoga pants, rather spend $120 on a pair of yoga pants, but they're not spending that on jeans. After filing Chapter 11 protection in July, the company exited in October 11 with plans to establish smaller footprint with increased digital growth. So once again, online. So the online market is there. We already talked about Jamboree, Payless, Radio Shack. Did you know Radio Shack filed? They filed for their
You know
second
about Radio
bankruptcy
Shack.
in 2017. H. Gregg, they filed for theirs in March 2017. We got some time for you all now. This isn't, oh, over the past 10 years, what's been going on? I thought companies were doing well. American Apparel. Most people know who American Apparel is. It's a pretty big company, but American Apparel. Aeropastel. What is it? Aeropastel? That company? They filed for bankruptcy. May 2016. PacSun, April 2016. Sports Authority, March 2016. We're naming out big ones that can be named. That you can hear. City Sports. City Sports might not be everywhere, but some people may recognize that name. And this is what happens when the market's going up. People get prepared for online the shift and the change in dynamics. So as you all can see, there was a change in dynamic. Online marketing, online everything has taken over at this point. So the apocalypse doesn't look the way it looks. When me and Cornell was sitting here talking recently and talking about what was that name of that company? Neiman's Marcus that recently filed. And that's the interesting part. Did we talk about Forever 21? These are companies, man, that are held up by women's sales. And women's sales are usually pretty strong. And as you all can see, there's a shift in marketplace. The marketplace has shifted. Roberto Cavalli has filed for bankruptcy as well. And
Now that's
so
crazy. That's a designer there.
let's talk about
Well
this.
known designer.
The luxury fashion brand Roberto Cavalli filed Chapter 7. So as you can see, they're not all filing for the same one. So it encourages you to do your research on the difference between them.
Uh,
So they,
hey, he moves some he moves some assets. Chapter 7, yeah, he went for the clean slate. He
right.
he, he removed some assets and let the rest of it went.
So
Smart man.
right. So he filed Chapter 7 bankruptcy in April for his U.S. division, the Art Fashion Corp, which entailed closing all American stores and letting go of nearly 100 employees. Roberto Cavalli, as an entity, admitted to having financial difficulties as the company was bought by Dubai-based retail. Oh wow! It's actually a Dubai-based real estate developer who Hassan. He has a J in his name, Swani, in November. This was last year in 2019. So they got some private equity infused in there real quick. They got some private equity infused in there real quick, and that was important there. So yeah, as you can see, there's a lot of major brands that are taking advantage of what will be considered the system. Not only are they taking
We
advantage,
and we haven't seen all this phase one. People like why is it? Pay attention when people talk. Like man, people. This is what you don't want to do. You don't want to sit at the house and TikTok your life away, and not pay attention to what's really going to go on in the next few months. Warren Buffett ain't saying he's sitting on that cash for no reason. He ain't injected it back in. I went ahead and got into some stocks, looking for some more investment. Like I'm waiting on the real estate to pop off. But I'm like, damn, this phase one. You just named out a few companies. Like it said you got designers that usually have billions of dollars filing bankruptcy, talking about they in money trouble. They setting up for the next play. When they say they in money trouble, this is what y'all understand about when Trump talk about bankruptcy. You got to know how to use these bankruptcy. These are business bankruptcy, meaning somebody moved as much as they can move, and he's smart. He did Chapter 7. He wiping the clean slate out. That don't mean he doesn't have any money over here somewhere else. He finna take advantage of something else. I got to cut my losses on this business. It's gone. He already realized my U.S. sales ain't coming back.
Right,
But
they're
a
not
lot of
coming
people that
back.
had
You
stopped by.
don't close the you don't
Yeah,
close the store because they're coming back soon or then later. They're not coming back, so they pull out completely. They're out of storefront. They're out of
yeah,
storefront
he
mode.
knows.
So the corporations are restructuring for online presences at this point. They're looking to throw more money, most likely, at online marketing tactics, whether it's Google and Facebook. So Google and Facebook stocks are going to grow because they're going to throw money at online marketing companies. People are on these platforms, YouTube. They're on other platforms, so more Fortune 500s are going to throw more money there, and as well at cable. Still, cable is still a viable source. People still pay for cable, so when they're paying for cable and internet, they're gonna get swamped with more marketing, advertising to do more marketing and internet buying and purchasing. And so we really wanted to do this episode to share with you all. Even recently, how a lot of the CEOs took off. What did they sell off their position? And Warren Buffett. When we talk about Warren sold off his position. He sold off the position, meaning he's into a liquid position where when he feels things are at a position where he can buy again, he will buy again. Right now, he's not buying, but most people are spending cash out of their savings. He actually just took a position of saving and holding. And now he's saving and holding when saving actually works to buy quality assets on the uptick, not still on the downswing or on the rebound. He's not going to catch any of the backlash. He's going to catch the upswing. This is
Cash time.
yeah, and he's
It's
a
cash time.
yeah, it's cash time. Cash is king. And he's an old time
Cash is
investor. You
yeah.
know.
And he's smart. Think about what he did. He's smart. Why would I keep letting my money go down when I'm smart enough to go buy me another company later on? I take that little small L I just took, just gonna go down some more. I'm gonna sit on my cash before I lose another 20, 30, $100 on the stock price, and I just wait. And I go back in and get it real fast when I see the bulls that came in and took over.
What's funny
That's
is
all he waiting on.
I can see him literally researching right now some of the best companies to buy right now as a land grab, like something that he knows is critical and integral to the world as we know it, whether it's online technology or any of those
This
things.
is like this go along with your private environment. You want to know why he sold the airlines off?
Oh,
As much as he sit here and talk about the government and everything else, Buffett did not want to go in business and the government involved. He don't want them to see everything he doing. He sold his whole entire airlines stocks off. He didn't hold none of them. And that's because, guess what? The government owns part of them companies now. They private. He ain't trying to be in business with the government. He knew that part was coming back, but he like, nah, we're gonna go move to something else.
right.
That's that private network, man. I'm trying to tell you, I seen that. Like, he know it was coming back, but he not dealing with the government. That let me know, like, where he set up, no, he don't want to be in no business deals with the government whatsoever.
Yeah, Berkshire Hathaway has a very specific investment strategy. And it's funny because recently they had their what did they have, like their annual conference, and it's just like, man, so many people don't go and watch that conference. It's actually on YouTube, the Berkshire Hathaway conference. Literally can go and watch that conference. He has it annually, and him and his business partner Charlie Munger. He has other ones, but Charlie Munger, they just sit there and go over different stocks that they have that were performing. And this is a fairly recent one, actually, in the middle of this pandemic. They actually have done this,
Yeah.
done their report, their earnings or losses as well, and even talked about their mindset and their outlook for 2020. So it's a really good time to actually go and listen to that particular one, because it is a historic one when you can see in the times that we are in, and then actually see the content that they're putting out in the times. This is someone that once again is a sophisticated investor. He takes strategic positions, and so you hear the positions that they're in. They're not in positions with the gov. If they are, then we don't know them. I want to hear if they are, but um, not taking a position with them and actually pulling out of a position and going to a cash liquid position. It actually shows you he'd rather be $200 million liquid in cash than be a billionaire. He'd rather be 400 million liquid in cash than be a billionaire on paper. So many people have had their valuations of their company.
Which
PayPal, all these companies have had uh, uh, their paper. It's funny, Cordell. Actually, I was actually looking at an article earlier about your guy Elon saying he's gonna open up the his plants in the United
plant?
States, yeah, and he'll take the fault for it. He always wants to go down as the American hero, the American badass. But nevertheless, that right there is total disregard for things that are there as the way they are. And you just see how corporate, the corporate cortocracy. Cortocracy is in place. The technocracy is in place. When you see him say those type of things, he's been a gunslinger for a long time, but over the past 3 to 4 to 5 years, he's taken more of a Trump position with his outlandish statements. Especially when he talked about the stock. If he's consistent for these type of sound bites, you have to expect this type of guy to have the dream to be president. Not only just because he's already, going for, going to the moon and going to Mars, and so, some of these guys try to stay away from, politics, but at the same time, don't be surprised when you see it. That's all we're saying here. Because that's what they do. They leave corporate America and they go straight into their lofty position of private security and infinite pension for the rest of their lives. You get an infinite pension once you go into the gov as the congressman. That's just the bottom line. And as the press, you get an infinite income. It's no one and done. So now you got an infinite income and probably private security, from your corporate cushy life. So, we definitely appreciate you all for tuning in live or listening to replay to the retail apocalypse corporations live paycheck to paycheck too, because they do, and we can see that. And so when people are in these positions right now and they're fretting that position, it's not as bad as a position as most people should be thinking. And why? Because there's a benefit to doing it. The only difference is you got to know the right people. Clearly, the corporations know how to do it. So why wouldn't you? A corporation is an artificial entity. How can an artificial entity get rid of something that you can't get rid of something? But people don't understand. It's business. It's not personal. So when you're doing the bankruptcy, you know that it's dealing with the business, not personal. And so we want to share with you all on the personal side that it may not be something to objectively look at in a negative way. It's business, not personal. That helps put things in a proper perspective. And that's the same thing for the personal and even for the businesses right now. There are businesses that are afraid to say, oh, I had to file a bankruptcy or possibly go through a restructuring. This is where you have the opportunity to have private equity to come in and get buyouts. These are leveraged buyouts. When you heard even a position with the Roberto Cavalli, that is a buyout from a private investor. This is the opportunity that some smaller businesses now have the opportunity. Cornell and us know, we know business brokers. We know business brokers that have a business brokerage that will sell a smaller business's business, help them get their businesses sold. We know people that have companies that do that. So when we say, oh, well, I have a small business, well, this is when something. See, the retail apocalypse is only bad for the people that didn't want to manage the books, didn't want to allow the books to be seen. So now that their books are able to be seen, they don't have anything worth anything. They don't have real assets. When you hear some of these companies, such as a Sears having real estate or someone else having this, when you have a company, you can have tangible value, tangible assets in that company that are on the company's books that have nothing to do necessarily with the current operational product or service. It just holds assets. Sears was doing that. Sears is a service company, but they were holding real estate. That's a hard, tangible asset. So they didn't lose from a retail apocalypse. They benefited, and they're benefiting. And companies are going to continue to benefit. Why? Because they understand it's business, not personal. But guess who's running these companies? People. And they're taking their own pensions and their own leverage buyouts. They're taking their what do they call them? They used to call them golden parachutes back in the day in the market. They used to call them golden parachutes. How is it that the company, even recently, when the banks were going under, Cornell, you there?
Yeah, I'm in.
This is recently when the banks were going under, and when the banks were going under, the gov pulled all the banking CEOs in the room. They got them actually all at the table at the same time with their so-called busy schedules. They got the Bank of America guy there. They got the Wells Fargo there. They got all these different guys sitting there, and they asked these guys, "Do you think you shouldn't have been given a $40 million bonus? Do you think you shouldn't have been given a $100 million bonus?" And this is what the response is. You can Google it. That's not our decision. That's the board's decision. That's the board's decision. That's the board's decision on how much money and how much golden parachute we get, how much windfall we get every year. I'm not in
Mhm.
control of my salary. The company decides that. It's inside of the corporate operating agreement. We're going to bring you all the operating agreement conversation because supposedly the vote's never done an operating agreement or a corporate bylaw conversation. But this is where the nitty gritty gets real. Is in the corporate bylaws and in the operating agreement. But for some odd reason, no one in the business world wants to talk about that. So we're going to talk about that in an episode. But retail apocalypse, we already know why the companies didn't go under because in their corporate bylaws and their company operating agreement, it says, "Hey, look, if and in case the company is looking to restructure, we will lay off as many employees as we have to before we get to the upper managers. If we have to let off upper managers, we will do so. If not, we will do everything to save all executive salaries at fail and protect them so if the company goes under, they can have a golden parachute." That's why recently, what was that? Recently, the Gov said, "Look, we're not going to give money to companies that can do corporate buybacks." Well, who's doing the corporate buybacks? The company. Who's in control of the company? The board. The retail apocalypse.
Oh yeah.
It's already been going on. Cordell, this is an interesting episode, man, to say the least. When you hear the retail apocalypse, like we talk about some of the companies that are going on, and so we're not talking about just Fortune 500s. What about the smaller small businesses? See, Cornell and I know the business brokerage. They actually are specializing in $5 million companies and lower. That's where a bulk of 70% of the small businesses is. They specialize in the small business category. So when people have businesses that were up to snuff, they could literally go sell off their business right now to private equity and get back on their feet and do a corporate restructuring in their life. If you had a business that was up to snuff, if you got the tax returns for the business, if you got financial statements for the business, who doesn't want to buy a small business that's actually working? Private equity is buying those all day. Banks are buying those all day. They want companies that can do that. Who's not doing that in private equity? Private equity wants niche businesses. Private equity wants niche businesses, not, oh, let's go get a big idea. Let's get the niche business that actually was doing good online. Oh wow, you know how many online people, Cornell, had huge profit margins through their products that they were selling over the internet? Even right now, people that are making the
Mhm.
mask, they're making the mask and they're selling them for 200, 300, 500% markup. When you got the mask for $2, you put a little stamp on it, you did something fancy to it, you're selling it for $7. You're selling it for $12. They got people selling masks for $30 to $50. You got people selling masks for $100. So the masks take less than $7 to make, and somebody's buying out those companies that can produce those products, that can market those products, because marketing comes before sales. So right now, you got to be able to have the product to be able to be marketed. We should have put the brick and mortar retail apocalypse is here. It's been here. We all have seen it. The internet babies have seen it. Oh, Blockbuster was the first one. Redblocks replaced them. Yeah, who replaced Redblocks? Netflix.
Yeah.
And then not only now is Netflix going to
Man.
be replaced, Netflix is going to be replaced with, once again, internet TV. So Netflix is going to do its best to hold strong. It'll be like a HBO. HBO's a real channel. So is Netflix. So what's that one thing you got? What's the Fire Stick? The Fire Stick is the internet. Free, whatever it is.
Yeah, I heard they got some new ones out now that you can pay $30 a month for the cable.
So the
All channels. So yeah, internet TV coming. It's coming.
and
It's gonna come with a vengeance.
any company that has vertical integration, that means you can control the temperature from your cell phone. You can control the TV from your cell phone. You can control your car starting from your cell phone. You can control any type of electric device pretty much in the house, have some type of form of monitoring through the cell phone. It can track your habits to make payments for things that you forget about. You don't need to worry about paying the bill. It's already going to be paid. But oh, we're coming tonight. Trending, go private. We're going to go there tonight. 8 p.m. Eastern Standard Time, episode 192. Hashtag trending, go private. Because we got to talk about that. But as far as the retail apocalypse and corporations, paychecks, corporations live paycheck to paycheck too, it's really just that simple. And you all have seen corporations that have filed bankruptcy and are still operating, and companies that aren't filing bankruptcy and still operating. So you all can tell the difference. We just wanted to share that with you all because it's a rather important topic for people to think in their personal lives why they can't do it. But you got corporations that are doing it. And everybody just needs to remember that it's business, not personal. And those things make things a lot simpler, a lot easier.